Hello, I'm Richard Hunter and welcome to our look ahead for the week commencing the 18th of November. Perhaps not surprisingly, the trade war discussions between the US and the Chinese continue to dominate market sentiment. On the peripheries, there's also worries around the recessionary environment because of the Hong Kong protests and, of course, the general election in the UK. That being said, markets have managed to maintain their very positive 2019 and in the year to date remain strongly ahead. The US market, the Dow Jones, is up 19% in that year to date, the S&P 500 up 23%, Nasdaq up 28%. Bring out the rear in the UK, the FTSE 100 has nonetheless managed to maintain a 9% gain for the year. So looking ahead to next week, we're starting to get a bit lighter in terms of company announcements, but there's probably three which are worth looking out for. Firstly, easyJet. It certainly had a very torrid year. It was actually relegated from the FTSE 100 in June, but in the last 3 months, the shares have risen by 29%. That's restored the market capitalisation to around £5.2 billion. And certainly, if that sort of level is maintained, there is almost certainly going to be a promotion back to the FTSE 100 at the next reshuffle in December. In the meantime, easyJet has been busy. It's bought up a few Thomas Cook slots, which obviously became available at certain airports after Thomas Cook's demise. There's also, of course, when we're listening to these full year numbers next week, just to see how easyJet performed over its crucial summer period. Moving on to Kingfisher, they're going to update us with a trading statement. The story of late for Kingfisher has tended to be very strong showings in the UK from its Screwfix division versus very weak performances in the UK from B&Q and in France from Castorama. So in terms of the fact that its shares have lost around 20% over the last 6 months, there's work to be done there. Finally, Royal Mail Group. This is another one that's had a pretty tough year. Over the last year, the shares are down about 41%. They've had to fight against the likes of threatened strikes and a £50 million fine from Ofcom, which was upheld. But of course, strategically, the main thing that remains with Royal Mail is whether it can upgrade its ability on the parcels division with the explosion of internet shopping offsetting the terminal decline of letters and cards. Thank you for watching. Have a great week.